This is the second podcast that we are having with Marc De Mesel, and I had a word in the last one. This time is Curtis's turn. Curtis, yeah, let's go.
Hi, David. Marc, nice to speak with you. I think we've done some Twitter Spaces before, but never a Zoom call. So nice to chat.
That's right. Nice to see you, Curtis. It's true. I know your voice very well, but indeed, face-to-face video we've not seen. So that's very nice to see you.
Yeah, I've got a small little presentation, I guess you could call it here, and look forward to your feedback. I've been bullish for over a year. We had hit about 3,600 on the S&P. I think it was in June or July, and we were talking about whether I thought that was the bottom. David was more bearish than me. And it did go a little bit lower. I guess I'm bullish in the very short term, and I'm bullish in the long term. Of course, we could have anything happen in between in terms of a recession or other risks. But for what it's worth today, I've got a bull case for the next, let's say, 3 to 6 months. Yeah, I've got a chart here. It's the S&P 500. The 200-week simple moving average is the bottom red line. You've got the 40-week simple moving average is green. We've got the November 2021 high. It hit 4,800. And then we had a fall of about 25%. It fell in 2022 from January to October, and we hit the bottom of 3,500. Notice how we hit the 200-week moving average there. Since October, it's been a year, almost exactly, since that 3,500 low, and we're exactly 2 years from the high. So if you're looking at October, November, we're 24 months from the high, and then we're 12 months from the low. And that does correlate quite well with crypto as well, right? In October of 2022, about 80% of professional analysts were bearish. I do not consider myself a professional analyst at all, but I was watching the data and saying, well, the data is just not supporting this. We're getting jobs, we're getting growth, and we're not having this disaster yet. Since then, they were wrong, right? So we had a rally. I think basically all the bears had sold, and there was no one left to sell. People were scared all through 2022, and by October, everyone was washed out. And so once the last bear sells, that's the bottom, right? We're at 4278 on the S&P as of today. Just a quick, again, we're talking about probabilities here. Nobody knows the future. You can make a case and make an argument for what you think might happen. That's all I'm doing here. But that we go higher from here, and either into the end of this year or Q1 of 2024, that we hit a new all-time high on the S&P. I put in 5,000 just as a round number. On the left, you can see I've made 9 points for a bull case on the left of this chart. It's a short-term view, a bull case with 9 reasons, and then some risks. There's 5 risks that would contradict this.
You really have called it so right. I remember our calls on Twitter there, spaces that we did at the bottom, around the bottom there. You were very, very bullish. I don't know if you actually 2022, did you see that coming, the crash? Were you bearish when the crash started, or were you catched with your pants down like I was, and were a bull the whole way down?
My crypto numbers went down. I've just held them through. You got me into Tesla in 2019, which is a big thank you. So I've been holding Tesla all the way through the highs and the lows, and still holding. I didn't call that 25% drop. I didn't call that.
Well, that's so interesting to hear, Curtis. Yeah, like I was very impressed of you the past year, actually, and especially how continuously bullish you remained and could back that up with a very strong thesis. And actually, you're the most bullish person I know right now, because you don't even, like most bulls, they do believe that, yes, there will come a recession very likely, and yes, there will likely come a strong stock market correction, but that's even different with you. You're not actually, you don't give that a high probability yet, even over the next, in 2024. So that's interesting to hear. So yeah, very curious to hear your thesis.
Okay, to be clear, right now I'm talking about the end of 2023 and Q1 2024. If you look at my point one there, inflation was 9.1%, this headline inflation, 9.1% in June of 2022. And David and I were talking about that. And my argument was if inflation starts falling, good things might happen. And it's fallen down to about 3% recently. A little bit of stickiness now. It's come up a bit, 3.5, 3.7. But the trend is massively down and going further. So it leads to point number two. The Fed has likely stopped raising rates. We might get another quarter point, but I think we're at about 5.5, 5.75%. Once that's confirmed by the market, I think we do get a rally. Once people see that finally we've either paused for a few months or the top is in. The big one was number three, real estate prices. So every single real estate analyst said, as soon as mortgage rates rise, we're having a massive real estate crash. It has not happened. It turns out that there's a lot of reasons why real estate prices have not fallen. Now, real estate sales have dropped, but it turns out that something like 40% of US mortgages don't exist. There's no mortgage on 40% of US houses. The baby boomers paid off their houses a long time ago. Of the other half, let's say, that of people that do have mortgages, most of them are locked into long-term 2 or 3% mortgages. They refinanced at very low rates and they've locked in for 10, 20, 30 years. So the current, 7% or 8% on a new mortgage is only affecting maybe 5% of the market. So it's just not had the effect that these professional analysts have said. Now, that could happen. It could trigger on in the future, but currently real estate prices are actually going back up. And the thing is, there's a shortage of supply. People are living longer. So the baby boomers still need their houses. They're not dying off. There's not supply coming in. You get inflation on the cost of building a new house, right? So prices are going up for that. And it's just underbuilt. A lot of zoning laws in the US. It's not easy to build a lot of new houses. Local communities will block massive building projects. So it's a basic demand supply. So price, and that's not my opinion. Prices are going back up. That's not my opinion. That's exactly what's happening. Number four, jobs are strong. So we added, I think, 300,000 or 366,000 jobs last month. The unemployment rate is 3.8%. I don't know what to say about that. That is what to watch. If you are saying a recession is coming, you need to see job losses. Okay, so as soon as that starts happening, I will say recession's on its way, but we just haven't seen that. So it's a great first indicator. Basically, people lose their jobs or are scared of that. They stop spending, corporate profits go down, and then the stock market falls, asset prices fall, and it's a negative wealth effect. That's what you're looking for. Yeah. I could go on. The Atlanta Fed is saying that Q3 GDP is up 5.5%. That's a massive jump. So I think last quarter was 2.5%. So you're doubling the nominal GDP growth. Corporate earnings should be up Q3. We're just starting the earnings season and corporate earnings should be up, stronger than Q2. So again, we're going away from a recession. Companies are having more profits. Jobs are strong. Housing is going up. Consumer spending, number 7, went up last month. It beat estimates. Estimates were a rise of 0.3% in consumer spending. It rose 0.7%. A big one is number 8. So it's an election year next year. November of next year, you have the election. It's likely Biden versus Trump. I think this is important because Jerome Powell does not want to cause the Democrats to lose. Okay, yeah. He's going to be very cautious of throwing the U.S. into a big recession. They definitely don't want to blow up the economy in the summer right before the election, right?
And I think that one way how this could play out is that we haven't seen money added to the circulation ever since April 2022. So it's 1.5 years of money being actually taken from the circulation. And I think that it's just too tempting to resume money printing and add them into circulation.
Right. Yeah. Sure. Good point. Okay. So that's a big one you don't hear about. And number 9 is that so everyone talks about the Fed, Mark, but that is policy. But you also have fiscal spending. In other words, the US government is spending trillions of dollars, right? And that money goes into the economy. Of course, something like 40% of US employees are paid by the government, right? So the government is the economy. That's the new, what's the word? Your government is your economy, right? And so there's the Biden infrastructure bill was passed this year. It's $1 trillion US, and it's just starting to get spent into the economy now. So those are my 9 reasons why in the very short term, I'm saying 3 to 6 months, we're likely getting a run up to test new all-time highs. That doesn't mean we can't have Q2 of next year. We have job losses and a recession, and who knows, the world could end. I'm just not seeing that in the data. And I haven't seen, you're saying maybe I've been the most bullish person you know. I think it's simply because the data hasn't changed. In fact, the data's gotten better every month. Risks. If inflation bounces back, the Fed may be forced to raise more, and that could trigger a catastrophe. If we get the Fed over 6%, 6.5, 7% as a Fed rate, this could be a big problem. And they do need to fight inflation. So I think inflation is going to stay at 3% or lower. But if that went higher, I think I would be wrong. We could have a bond market crisis, number 2 in my risks there. The reason we had the banks blow up in March, right? You had Silicon Valley Bank and a couple others, is they had big bond positions that became devalued as the Fed suddenly raised rates. So banks that are holding bonds, the bonds are losing value, not to mention people in pension funds and anyone else holding bonds. They're losing value, right? Because as interest rates go, as yield rates go up, the price falls, right? This could cause problems in bank balance sheets. I don't know. I'm not a banker. I think the banks are very well capitalized. I don't think we're getting a 2008 crisis. And remember that 2008 was a credit crisis. So in 2008, the banks were insolvent. They quite literally needed a bailout. And that's what caused the panic freeze, where they didn't know the counterparty risk. There was about a week there where they didn't know what was going to happen or who owed who money. Very similar to FTX. BlockFi and all these guys, nobody knew their counterparty was solvent, right? So that's why we had the 2008 crash. I don't think we're anywhere near that. And if you talk to really smart guys that know this market, they would say the likelihood of a 2008 banking crisis is very low. So so number 4, risks. Yeah, if we see job losses, a recession could come. Of course, the war in the Middle East, if Iran and the US have a kinetic breakout where there's missiles being fired between Iran and Israel, or the US gets involved, you always have to consider that. The Ukraine war is not over. And so all of those things, but that's always true. Always, 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 always. You always have risks, and the bears are always pointing to the risks. The fact is 3 out of 4 years is a bull year. We had a 25% sell-off last year. We had a crash. So all that together, that's what I've got here.
That's very interesting. I'm curious in portfolio compositions of yourself. If I don't know if you share it, but how much percent do you have in crypto? How much percent in stocks? And do you have any cash or other investments?
I guess generally I would probably have about 4 quadrants, right? So real estate, crypto, stocks, cash, and then I spend my cash in the bear periods. If I'm smart, I'm not always that smart, but if I can, for example, in the last year, I've moved out of cash and back into some crypto and added some positions. Palantir was a new add this year. Otherwise, I'm actually a very boring investor. I tend to hold my positions long-term. So my Tesla position's about 5 years, 4 years. Bitcoin's always been a hodl position for 5 years. Added to Palantir, and then I have some other. Always keep a bit of gold.
So I remember that you had almost no cash anymore a year ago, or you were. So is that correct? And you have only 5% cash or so. And then how big is your crypto exposure?
Yeah, so crypto would be about 30%.
And then stocks.
Yeah, maybe 30. And then real estate would be 30.
And do you keep track of your compound annual growth rate over the years?
I do. Yes, I do.
And how much is that?
I had a very good 2020 and 2021 because I had big positions in Tesla and Bitcoin, and they were the top two performers. You can imagine they were also the big losers last year, and then they've recovered quite a bit, but it's all moot because I'm in a hodl position. So yeah, I think I had about a 60% year and then probably a minus 30% year last year. But
so since 2018, since you sold your business, do you know what's your average return?
I don't have that down.
Investing, it can be very hard, but it can also be easy. And I think the way you are dealing with that, you do that very well. Like you probably have over 20% compound annual growth rate. Like that's far better than most investors. And even though you run your own business, like it's not your main goal. Like with me, it is, but with you, it's not. Only the past few years. So, but if I look at your approach, actually, that's the right approach. Like that's what people should do. Like, okay, hard assets. That's what you have. Like you don't have bonds or cash or very little. You basically real estate, stocks, crypto. They're all hard assets. A little bit of gold. They are all hard assets that are not impacted by the inflation. Unlike bonds and cash and savings accounts. Like that's what most people do. They have like half of their portfolio in these kind of assets that actually don't yield a return and are just money drains. And then it becomes a lot harder to have good returns. So I think that's one thing I see with you. And then another very disciplined approach is like you build up cash during the good times, you spend it on investments you like during the bad times. These are just very simple principles that you apply. And if you just do that, actually, you're going to do well. So I think that's really admirable and many people can learn from that. Yeah.
Yeah, I'm fairly conservative, I think, because I struggled running a business for many years and it took a long time to build up some assets. And I'm very cautious. I think the next, David, if you can jump to the global assets, that one. Yeah, I shared this. We don't have a lot of time, but I thought this was interesting. And this shows what we are calling maybe the great wealth transfer. So this is showing US net wealth, 156 trillion, not billion. This is a trillion with a T, and how it's broken up by the different generations. So you can see half of the left half is baby boomers, which are people aged somewhere between, I guess it would be 60 to 75, maybe 60 to 78 years old. They have $78 trillion in assets, real estate, equities, pensions, private businesses. They don't own much crypto at all. They will be passing this money to their children through inheritance to basically Gen X and millennials. And it will be a massive wealth transfer. You can see Gen X has about 46 trillion. Millennials only have 13 trillion. The dark purple is older than the boomers. The boomers' parents, there's another 18 trillion, and they're in their 80s and 90s. So I guess what's useful here is to say that a lot of money is going to be transferred, and it's going to go to a different type of investor. Millennials do not buy gold for the most part. Millennials are more inclined to buy things like crypto. And that if you can get this correct, if you can anticipate that just even small movements, let's say from bonds or stocks into crypto. So currently crypto is $1 trillion, and you have 78, 90 trillion moving from these more conservative types of people into these new hands. And that this is bullish for, let's talk about crypto specifically, even a 5% reallocation is very good for for the crypto market. And so if you can get this right, there might be some ways to make money here.
Yeah, I just love the chart. I think that I didn't see it like when you say, and actually that purple one is from 80 and 90 years old. I'm like, what?
Yeah.
They're like, oh my God, this is extremely bullish. Also, what you point out that actually the youngest generation don't invest in gold anymore. This is a very, very important, I think, to take that into account. When you choose today what you're going to invest in, um, uh, you need to take that into account. Like, yeah, this is extremely bullish for the long term. It's just a mental shift. I see it in my own environment, also in my own family. Also, they just don't invest. My father, my uncles, and aunts, they know about crypto, but they just don't do it.
Yeah.
And then my nephews and cousins and brothers and sisters, they do. They do invest in crypto, and they're not investors. They're just working people, huh? But they know what it is, and they buy some of it, huh? But it's extremely bullish that you see that even the younger generation that comes after us, actually they skip the gold part altogether, and they are only interested in crypto, and that makes a lot of sense. So yeah, I think that's very bullish, and you keep on pointing that out also, huh? And I think that's actually very wise, because that's the long-term trend. That sets valuations, is what people value, huh? And if they value it, they will going to own some of it, and the valuation will go up. So yeah, I think that's very, very genius of you to keep pointing that out.
One other thing is that, so we're seeing interest rates. If you do think interest rates are going to stay higher and go higher, so which of these asset classes are going to get hurt most? Bonds and real estate. Real estate is going to become less profitable because margin, if you're talking about investment real estate, we're not talking about your primary residence. People will keep their house, but the person who's investing for cash flow, the second house or the third house or the fourth house, their profit margins are very inflation sensitive. So currently there's about 300 to 400 trillion dollars in real estate globally. Imagine just a small percent of that goes out of that into crypto or bonds. Bond market, 120 trillion globally. Those bonds are crashing. The value of them is going down. As interest rates rise, the price of bonds falls. So again, I'm just looking for very small spillovers, 3%, 2%, 5% out of that into crypto, and you have a massive tailwind. Even without that, I think we're going higher. Bitcoin is 600 billion right now. It's not even 0.6. It's not even 1% of global assets. It's like 0.6. It's not even 1 trillion. And this is just the US, right? This is not Saudi Arabia and China and Europe. And so the numbers are quite favorable to, let's say, a long term, whether that's maybe next year we do have a crash in crypto, maybe we have a recession, but let's look towards 2030, right? I just see higher numbers, all asset prices, all fiat are falling. And nominally, asset prices will be higher. That'll include real estate. I think it'll include good stocks, good companies, and crypto. But in nominal terms, not necessarily, I mean, if you're looking at real gains, you have to consider inflation.
That's interesting. Yeah, I want to ask some more questions about taxes. How are taxes in Japan? Is it a favorable regime or not so much?
No, it's not very good. So crypto is taxed as income, if you can imagine. So your marginal tax rate can be as high as 50% on your crypto profits.
And real estate?
Real estate, there's a primary residence is a tax shield, 100%. If you hold real estate, like investment real estate for more than 5 years, I believe you're tax exempt. Within 5 years, I think it would be taxed similar to the US. The thing with real estate is it's been going down since the 1990s, right? Only recently we've had a boom. We had a 30% bounce back. In Japan now, stocks and real estate are going up as the yen is crashing.
That's very interesting, because it was a 30-year bear market. That's crazy. The 90s, the new millennium, as well as 2010 and onwards, still 2020, 30 years real estate went down in Tokyo, and it's only now turned around. That's a very interesting cycle.
Yes. And the yen might be, so we're at 150 to the US dollar, 150 to, 150 yen to one US dollar. It has not been at that weakness since 1992, I believe. So again, a 30-year weakness on the Japanese yen versus the US dollar.
You guys have any opinion on the US elections there? Because there's lots of tension there with Donald Trump. It's really seems to be still very popular, and it's probably going to do well in the presidential race, but at the same time they try to jail him. What will happen there? Because some people predict that actually you could get civil war there. That would be quite something for the world. Do you see that as a possible scenario or not at all? Like, what do you think will happen in 2024 with in the United States?
My understanding is a lot of these lawsuits are their last effort to try and keep Trump from running because they know he's a threat. So I think there's probably a 50% to 55% chance that Trump will win and will be president again. I don't think you're going to have street violence. I think that's overplayed. I think it takes a lot for people to actually pick up weapons and go to war. I don't think you're going to have that. I think people are too wealthy in America. They don't want to, nobody wants to pick up a gun and throw their life away. So I think to have actual kinetic civil war, you really need an economy to be crashing. Like you need people, like, Sri Lanka, did you follow Sri Lanka recently? So Sri Lanka had the Tamil Tigers, they had a civil war for like 20 years. And the government still held strong. However, the minute their farmers started to starve to death, you had them storm the parliament. So I think it's a little bit of an example. When you think about like you or me or David, what would it take for you to actually grab a gun and take out a politician? It would be where you have nothing, right? You have no food, your family's starving. And I think it's true that people need to get really pushed badly before they really pick up weapons. Now, I think people are very unhappy in Europe. They're very unhappy in Argentina. They're very unhappy. But I think it'll be political change or some sort of extremism within politics, not actual street violence on a large scale.
Very interesting argument. Actually, I never looked at it that way. And yeah, that's very true what you're saying. Like, there's probably a strong correlation between a civil war and or violence in the streets and toppling of governments in relation to like poverty levels. There's probably a strong linkage there. That's indeed a very good point. I was also curious, what is your stock allocation? So you have Tesla, you have Palantir. How much percent is that of that 30% stocks, and what kind of other stocks do you have, Curtis?
I don't own many stocks. I'm mostly Tesla, Palantir. I own some other small. I have a Teladoc position that went way down. I'm holding on. I have the uranium fund. It's not really a stock, it's a commodity, but it's, what is it, URA? I have a little bit of that. And a couple, one called Toast. It's like a US software company for restaurants. Other bits and pieces. I mean, you get lost after a while trying to keep up with all of them. Oh, SoFi Technologies, SOFI. A lot of tech. I think once you get into tech, you're too impatient to invest in other things. Like I can't imagine a 6% return. You know what I mean?
Yeah, this is also hard for me. Once you get into some promising small crypto projects with a great team behind them, with a good track record, and once you study them enough, then it just becomes like it gets into your head like this is really an opportunity that you need to do your best to cash on it. However, guys, I will have to go. I also have somebody at my door. Yeah, I'm gonna have to tell you that we had a great time.
I think your channel should grow.
Yeah.
So I think wish you guys a good next few months then, and happy to talk again anytime.
Yeah,
great, Marc. Thanks. Nice to speak with you.
I'll stay in touch.
Nice to meet you also, Curtis.
Okay, so have a good day, guys, and
thanks, guys.
stay in chat.
Okay, bye guys.